guys, welcome back to my channel. So I apologize for no intro in this video. I did have an intro recorded and unfortunately there's no audio to it and I don't have the time to re-record an intro. So this is going to be the intro for this video. I'm just going to recap the trades that I took today. So today is June 17th, Friday. I was quad witching today, as well as Powell was speaking in the morning at 8:45. So there was a lot going on today, but I was able to take two trades with SPX. One of them was a losing trade. So the first trade that I took was a losing trade. And then the second trade that I took was profitable. I ended up profitable $4,297. So I'm just going to recap those two trades. I did take both of these live on voice with my Discord team. So you actually don't see the fills. Actually don't see me call them out because it was on live voice. So I do just want to say I have a live recording of this trade, but it just will not open for some reason. The file will not open, so this is just going to be a trade recap. I do apologize about that, but I will go ahead and recap both of these trades for you guys and kind of show you guys, walk through my mindset on being able to switch from puts to calls, because my loss was on the call side and then my profitable trade was on the downside. So I kind of just want to go through and show you guys my thought process on being able to switch so quickly. Okay, so my first trade on SPX I took at 9:52 and it was a loss. I took it at 9:52 and then it was for calls for the break of 3,700. So I took the 3,700 break on SPX, and my target on this was 37.10, and then 37.30 I think was the next level up that I had on it. So I entered this trade at 9:52. I exited this trade at 10 o'clock. The premium dropped from $24.80 to $18.40, and I ended up taking around a $9,600 loss on this trade. So I had a pretty good entry point on this. The market just didn't end up giving me what I needed. Overall market sentiment to the upside was slightly bullish in the first 30 minutes, and then once 10 o'clock hit, there was the market reversal. Usually around 10 a.m. you start to see whether the trend is a strong trend that the market is in or a reversal. So sometimes you should pay attention to when 10 o'clock hits, because like I said, you can see a 10 a.m. reversal, or that'll kind of signify whether the trend that is currently in place is a strong trend or not. I entered it at this candle here, so I waited for confirmation. My entry was pretty good because I did wait for confirmation on this play, because since I didn't think that we would have a strong move to the upside and was getting close to 10 a.m. On top of that, Powell was speaking and quad witching. I want to wait for confirmation on days like today. So this was my breakout candle at 9:51, and this was my confirmation candle at 9:52. So I entered at 9:52. I was profitable on this trade. As you can see, it did make a move up to 37.08. However, I held strong to my profit target of 37.10. On days like today, where it was quad witching and Powell had spoken, I should have been quicker with my scalp and just ended up taking it as it approached 37.08. And then if we look at ES's chart here, you can see that ES was trending above its VWAP, which is a good signifier to the upside. The only thing is that ES had levels at 3,700 and then 3,710. ES did end up touching 3,710. SPX just did not react quick enough. And I did have a level of resistance at 3,710 that I was not paying attention to with ES. So I should have locked this as it approached 37.08, because ES was approaching 37.10. So that was kind of a fault of my own, as I didn't lock it quick enough as it made the move up. So since I didn't lock once it hit 37.08 on SPX, you can see that I did end up getting caught in a reversal here, and my stop on this was a hold below 3,700, and I wanted to actually see ES break below 3,700, which is why I exited this at 10 a.m. and I didn't exit this at 9:58 and 9:59. I did take a little bit of a heftier loss on this, but I really wanted to see if ES was able to hold the 3,700 level or not, because what could have happened here is ES made the move up, rejected 37.10, came back down, retested 3,700, and then continued up. So technically my stop was really ES being able to break 3,700 and hold below 3,700. That would be my stop loss. So that's why I ended up exiting at 10 o'clock. On this 10 o'clock candle, you can see that market reversed hard, and it was 10 a.m. like I said, and at the same time ES started to come back down and reverse and start to break its view up. As at the same time, NASDAQ was also reversing. NASDAQ did reverse a little bit harder than ES. So, and there goes market close. So NASDAQ did reverse a little bit harder than ES. but you can see here ES. And then if we look at the VIX as well, so 10 a.m. this is the VIX here. VIX ended up holding low of day on the 5-minute here, and you can see that it was also previous day's low as well. This 31-point level was the previous day's low here. You can see it touched here as well, and pre-market as well. And again, was not paying attention to that. VIX ended up holding that 31-point level, 31.17, and bouncing as well with the market. I'm sorry, bouncing as well with the market, because when the VIX moves inverse of the market. Yeah, I confused myself there for a second. So VIX ended up bouncing. VIX moves inverse of the market. So when the VIX moves up, market moves down. So that being said, I exited this at 10 o'clock. I ended up taking a $9,000 loss. I did follow my trading plan. My entry was 3,700. My profit target was 3,710. My stop loss was a hold below 3,700. I followed the trading plan all the way through. It didn't end up working out. Now, the good thing about this is I didn't let the loss affect my other trades, which is why I was able to make this back so quickly. The thing with being able to switch your mindset is, one, not being biased when you enter the market. This is always why when people ask me, what do you think the market is going to do on this day? What do you think the market is going to do on this day? I don't really give them an answer, only because I don't like to be biased. I like to approach the market every day with a fresh mindset. Don't like to be biased, don't like to think the market is going to do this or that. The reason why I don't like to think that is because the minute you think the market is going to be, let's say, bearish, you are now scared to take calls. And if the market does make a move up, you're not able to capitalize on the upside because mentally you were prepared to take puts. So that's why I don't like to come into the market on any day with a prediction. I kind of just take it as it comes, so I'm able to quickly switch back and forth between puts and calls if I need to, which I needed to on this day. So as markets started to pull back here, you can see that SPX's 9 and 21-day EMAs reversed, and I waited for the 5-minute to actually cross, so you get the death cross here on your EMA. So the 5-minute the 9 EMA, which is my orange line, crossed below the 21 EMA, which signifies a death cross and a potential reversal into a downtrend. So once I saw this on the 5-minute, this cross, my entry point to the downside was 36.60. So I waited for SPX to break 36.60, and I had targets of 36.50 and then 36.40, which was the previous day's low. So my entry point on this was going to be 36.30, a break of 36.60 with target targets of 36.50 and 36.40. So I ended up entering SPX at 10:22, and I exited at 10:35 and 10:36. So I entered SPX right here at this candle at 10:22. Okay, so you can see here on this 10:22 candle, SPX broke below 36.60. The one thing that I did mess up on this trade is I didn't wait for a confirmation candle. The reason why I didn't wait is because VIX did make a strong move up, crossed above its EMAs, and held that previous day's low, which signifies it could potentially bounce really hard. And it was a 10 a.m. reversal, which signifies a stronger reversal in the trend as well. That's why I was a little bit more confident taking this play to the downside and entering on the breakout candle and not waiting for a confirmation candle. At the same time, if we go ahead and look at ES, you can see that ES at that time crossed below its had already crossed below its VWAP. We get the death cross as well here on ES, and ES broke below. Yes, ES had broke below its low of day, which was 36.70 here. You can see at 10:20, ES broke below low of day, which is why I was confident taking SPX below 36.60 as ES was breaking low of day. I entered SPX at 10:22, and my first profit target was 36.50. I exited some at 10:35, so I exited some on this candle here at 10:35. And like I said, when I monitor SPX and I'm in, you guys know that I watch it on the 2-minute time frame. So if we switch this to the 2-minute time frame, you'll see a much cleaner trend down. Okay, so this is your 2-minute time frame. This was my entry point at 10:22. Okay, I exited some at 10:35, so on the open of, or at the end of this candle here and this 1-minute candle. Okay, I exited the rest at 1036, which was this candle right here. And the reason I exited the rest at 1036 is because my next level of support on SPX was 3640, which was the previous day's low. So you could always see a bounce at previous day's low. So remember how we saw the VIX bounce at previous day's low? That is going to be a strong level of support or resistance, previous day low or high, when a stock is moving. You always want to pay attention to previous day low or high, because usually if the stock does approach that level, you could potentially see a bounce. And you can see that SPX did end up bouncing there, made a small move down, but you can see that it was not able to hold below that 3640 previous day's low and ended up bouncing into a reversal for the rest of the day. Okay, so it ended up reversing into an uptrend. So you could also take the bounce here. This is another strategy you can implement. So if you see a previous day's low or high and the stock is approaching that level, you can either take the breakout of the previous day high or low, or if the stock ends up bouncing, you see an EMA cross. This is a golden cross, so your 9 EMA crosses above the 21 EMA. You could potentially take calls on the reversal on the bounce. So there's multiple plays that you can take on a previous day low or previous day high. It is a very significant level of support or resistance on a stock. So definitely pay attention to that. And that is why the 3640 was my profit target. And I exited all of my position at 3642. It got close to 3640 and I ended up exiting at 1036 the rest of my contracts. So hopefully this play makes sense to you guys. On the downside, I waited for ES to break low of day to be able to take SPX below 3660. On the upside, I did get faked out, but however, because I wasn't biased in the market and I didn't allow that red trade to affect me, I was able to quickly switch over to the opposite position and be able to take puts on the downside. I still had a trading plan to the downside. I didn't just blindly jump into puts afterwards, because what some traders will do is they'll exit here for a loss or exit somewhere here for a loss and then immediately jump into puts and potentially get shaken out on a pullback or a reversal. So you don't want to do that. You want to wait, take a step back, see what your trading plan is to the opposite side. Do you have a trading plan to the opposite side? And if you do, allow the stock to be able to fully approach whatever level of support that you're watching so that you're able to follow your trading plan through. You always want to have a trading plan on either side. You don't want to be biased in the market, so that when you do have days like this, you're able to capitalize on both sides of the market. All right, guys.